So there are two types of reserves. One is retained earnings and one is general reserves. When I say retained earnings, so retained earnings are free reserves. When I
Free
say it is a
reserves.
free reserve, it means what? It means that money from this reserve, you can write it along with me if you want. Money
Okay.
from this reserves can be used freely. You can use the money for any purpose that you want. You can give dividend from here. You can give bonus share from here. So everything you can do from retained earnings. Whatever
Yes.
profit for the year you get, you will transfer it to the retained earnings. Are you with me?
Yes.
Yes.
But general reserves are some reserves that is kept aside for specific purpose. That is kept aside for expansion. It is kept aside for some contingency. Like if there is some event that you did not predict and it happened, and because of that event you incurred a loss. So from where you will
Okay.
get the money from?
General reserves.
So you will use the money from the general reserves. And retained earning you can use for everything that you want. So what does the company do? Every year they transfer some money from the retained earnings to the general reserves to strengthen
Yes.
the position of the company. So my question was, state two reasons why directors transfer money to general reserves. Okay? Why do the directors transfer money to general reserves? Tell me what reasons you will write.
For like retained earnings. That's the first thing.
Okay. The reason why directors transfer money to general reserves is to retain cash in
Retained.
the business.
Yes.
Okay.
Yes.
To for use in emergencies, contingencies if company has financial difficulties.
Hmm.
Only these two things you will learn. So two reasons why the directors transfer money to general reserves is what? To
What
retain
was
cash in the
to
business
retain cash in the business and for to
and
use
for
for
use
emergency.
in emergencies, contingencies. And
Okay.
you can also
Understood.
write to strengthen the financial position of the company. Please write it, learn it,
Yeah,
and then
sure,
write.
miss.
I will do the taker.
Okay.
To strengthen the financial position of the company. Give me two difference between preference shares and debentures.
Okay, so preference shares are like part of the company's share capital, which can be paid by dividend, and
Which can
debentures
be
are
paid
low,
by dividend,
which is only paid by dividend. There you go.
which is not paid back. It is part of the share capital and
Uh-huh.
we pay dividend.
Yeah, paid. It is paid by dividend.
No, we pay dividend.
It's
You
the
are
same
saying
thing.
capital is paid back. Capital
No, no,
is
no.
not
I
paid back.
meant no. I didn't say capital is paid by. It says like it is paid by dividend, not capital. It's
It
alag alag.
is what? Preference shares. It means what? When you're denoting it, you're saying preference shares.
Yeah. So
We
preference
pay
shares are
dividend as a
yes
return
as a return. Okay.
to preference shareholders. How
Yes,
about
to shareholders.
debentures?
Debentures are loans as a company like pay and are paid by interest to the shareholders.
We pay interest.
Yes, we pay interest to the shareholders.
They're not shareholders.
Same. All right. We
They're
pay
not
shareholders.
saying shareholders
Yeah,
are
I
owners.
didn't say anything. We pay them by interest.
We pay them interest. Okay. What is the
Yes.
difference between ordinary shares and debentures?
Ordinary shares and debentures. Wait, miss, let me think. Mm,
So debentures are not owners of company.
Yes.
Ordinary shares?
Ordinary shares, they are the owner of the company.
Yes, very good. They are the owners of the company. This is my
And
point.
yeah,
Second point,
or debentures, they do not have voting rights.
they do not have voting rights. Very good. Ordinary shares,
They have voting rights.
they have voting rights.
So ordinary share has voting and the debenture does not have
Voting rights,
own.
yes.
Okay.
Then they receive dividend. Ordinary shares, they receive what?
Dividend
Dividend.
by from us.
And debentures, they receive what?
They they carry fixed rate, I
Fixed
think
rate
so.
of interest.
Yeah, fixed rate of interest.
So this is a
Yes.
difference between ordinary shares and debentures.